Technology has an impact on every business around us. One sector that is significantly impacted by ever-changing technology is the automobile sector. Electric vehicle is a new buzzword, rather the latest disruption in the auto industry. Automobile and auto component companies are busy trying to adapt the new norm. However, there are few auto component companies that are lesser impacted by the EV revolution. Reason being, these companies are manufacturing parts like switches, horns and lights. Today we will talk about one such listed auto component company that not only has an existing EV agnostic portfolio but has also introduced manufacturing of EV components. It is none other than Uno Minda. Let's see what Uno Minda does, what is its business model, its financials and SWOT analysis. Uno Minda is a leading auto component supplier to two-wheelers, three-wheelers, four-wheelers and tractors. It has 71 manufacturing plants with workforce of over 23,000 employees. So, what makes Uno Minda hot? 1. Diversified auto components portfolio. 2. Major part of portfolio insulated from market disruptions. That is, an EV agnostic portfolio. 3rd, increasing kit value and market share gains. 4th, expansion in premium segment contributing to these gains. 5th, big EV opportunity and recent order wins in the EV space. 6th, strong relationship with auto manufacturers. 7th, solid track record with historical 5-year sales growth of over around 20% with margin expansion. Let's take a look at the revenue breakup of the company. Uno Minda's revenue segments include switches, lights, casting, seating, acoustic and EV components. Switches are the top contributor at 28% of revenues, followed by lights at 23%, followed by castings, seating and acoustic each at 19%, 10% and 7% respectively. Others, that is the sensors and EV component segment, contributes around 13% of the revenues. Portfolio characteristics of the company. Uno Minda is among top 3 players in each segment it is present in. The company is reducing its dependence on switches and lights. It has made a successful entry in new verticals of seating and now EV components. In terms of geographical contribution, 83% of revenues comes from India and rest 17% are international. 91% of the revenue comes from auto manufacturers and 9% from aftermath or after sales service. Customer base. Uno Minda has marquee customer base of customers both domestic and global across two-wheelers, four-wheelers and tractors. Some of its customers include Maruti, Toyota, Mahindra, Tata Motors, TVS, Bajaj, Royal Enfield, BMW, Yamaha, KTM, etc. Let's take a deep dive to understand its power-packed portfolio and growth driver of each segment. First one, switches. The company has leadership position in the segment in both two-wheelers and four-wheelers. The segment continues to see strong industry-beating growth on account of shift to premium models, import substitution and exports. Second, lights. Uno Minda is the third biggest light supplier in the country and continues to witness strong growth on the back of rising LED adoption over traditional lights. Third, castings. The company is a leader in the alloy wheel segment and will continue to see robust growth with increase in alloy wheels penetration. The fourth segment is the seating segment. The company is a leader in commercial vehicles, buses and two-wheeler seating segment. Fifth, the acoustics. The company is again a leader in India in the horn segment and will continue to witness robust growth on account of shift from mechanical horns to electronic horns. Finally, the other segment or the EV segment. One of the fastest growing segment is that of sensors, EV components, blow molds, and it is expected to maintain high growth trajectory as well. Increasing kit value. Over the years, company has seen sustained increase in the kit value, or content per vehicle in both two-wheelers and four-wheelers. In two-wheelers, premium segment is seeing the highest growth, and in four-wheelers, SUV is seeing the highest content per vehicle. Key developments and the targeted EV portfolio. Uno Minda is building a solid EV portfolio. Its products under production and supply include battery management system, onboard charger, off-board charger. Its order include motor controllers and DC converters. Its products under discussion with customers for supplier include battery packs and acoustic vehicle alert system. Potential EV kit value. Uno Minda is looking at supplying components worth Rs 56,000 in an electric two-wheeler. It has received EV orders worth Rs 470 crore, which is almost similar to the entire FY22 order. Coming to the financials, on the revenue side, the company has shown better than auto industry growth with its 5-year CAGR at 20% on account of launch of new products, acquisition of new clients, and market share gains in some of the key segments. On the margin side, the company has seen consistent improvement in margin profile, barring the year FY19-20. Return ratios and turnover ratios. On the ROE and ROCE front, higher capex and lower profitability impacted return ratios in the year FY20. However, FY22 has shown improvement both in return on equity and return on capital employed. Turnover ratio. Its turnover ratio has been stable. Flows. Uno Minda's cash from operations has shown consistent improvement. However, the capex need has been on the higher side. Also, the company is seen reducing debt and improving debt to equity ratio. Auto industry outlook. The overall auto industry outlook is positive, with domestic auto industry poised for strong growth in coming years on the back of buoyant demand. The domestic auto industry is expected to grow in double digits, which will drive the auto component industry growth as well. Valuations and shareholding. On valuation side, the stock trades at rich valuations. At Rs 540, the stock trades at 64 times PE, which is below 3-year median PE of 67 times, but above 5-year average median PE of 42 times. On the shareholding front, mutual fund holdings have gone up by 3% to 14% in the last 1 year, while promoter holding has gone down by 3% YOY. Let's take a look at the SWOT analysis of the company. Among the strengths of the company are: firstly, its engine agnostic portfolio; second, its leadership position in key segments; third, its robust financial performance; fourth, its new product JV for electric vehicles. The company's weakness include: first, dependent on auto companies; second, being capex intensive; third, its low net margins. Opportunities for the company are: first, revival of auto industry that is expected to grow at around 12 to 16% in the near term. Second, auto ancillary industry growth, which will be higher at 17 to 20%. Third, market share gains led by premiumization and import substitution. Fourth, big electric vehicle opportunity. Fifth, global demand for India-made auto components. And finally, favorable government policies. Among the threats are: first, cyclical industry; second, high commodity prices; third, supply side shortage; and finally, the premium freight expenses.